Hello viewers, if you're getting too many false signals in your Renko chart trading, scratching your head, wondering what's going on, well, this video, this secret hack that I use in my own trading could solve most of your problems and seriously improve your win rate. So let's get into it. So I've just pulled up a random Renko chart just to illustrate the problem. And we all suffer from it, and you can see it here. We've got this nice trend down in this market here, looking really strong downside. We might have missed that. We're a bit frustrated with that. We're going to wait for that pullback, and maybe we're using a stochastic indicator like this one below. As you can see, we've got these downtrend signals breaking the stochastic percentage K, percentage D, and we might be wanting then to go short and all those times there, but look what happens every time. How frustrating. Bounces back, we might lose, and we probably definitely lose on that one as the price then reverses on upwards. So how do we get over that really noisy period? How can we filter that out to at least get rid of some of those bad signals and improve our win rate and our entry timing a lot better than just going off the raw Renko chart? And that's what this video is all about. It's a really simple hack. Like I said, I use it in my trading. It's very, very easy to apply, and it will save you a lot of heartache, frustration, and hopefully improve those results. So the problem is, a lot out there don't really backtest their strategy properly. Now, if you did over a sufficient amount of time, you really nailed that back test, then your losing streak, in terms of trades that might go sideways for 5, 6, 7, 8 in a row, 10 in a row even, but at the end of that process, if you stayed with it and you took every signal, then you would be a winner in the long term. But then you've got to be on top of those statistics really, really well. What is the drawdown in that period? Can you actually afford to live through that drawdown whilst it's working its way out back to the more clearer signal? So doing that is a hard job and very difficult for most of you, and a lot of you just will go straight into the strategy and sort of do it on the fly. And then when you get to that period when you're getting fast small block size strategies in the Renko and you're getting knocked out all the time, and you think, well, I've got such a bad idea, what am I doing? But then shortly after it goes off and wins and you just don't know what to do. Well, we can instantly improve our results by doing, like I said, this small tweak to our charts. And obviously you should always do the back testing, know what you're trading, know what your results are, because using those stats can massively improve your results. And always say know what you're trading and always keep on top of that. And also getting the right block size, always bang on about getting the right block size. But if you're like a day trader using the small blocks, you get volatility in the day, you're going to get knocked around. But how can we neutralize some of that noise to, like I say, improve our results? Like I said, simple tweak, and I'm going to show you that right now. So this is a WTI crude oil sort of mean reverting trend following strategy that I like to trade. Does very well for me, but it's going to be good to illustrate the point of this small tweak. But as you can instantly notice, there's 3 Renko charts on there. That's massively important. You at least need a minimum of 2, but ideally 3. The one on the left is our trading window, a very fast block size. It's only actually 2.5 cents. It rounds it up to 3 on Renko, but it's actually 2.5 there. Just underline that to show you the block size. So we're pretty fast, and as you can see in this section here, loads of noise. We'd have been chopped all around if, say, we were using the stochastic there at the bottom. So how do we filter it? We use a bigger block size immediately after, and then an even bigger block size as our ultimate sort of trend filter for that market, and it applies across all markets. Let me just tidy that chart up, remove the drawings. So what is the idea behind it? Well, quite simply, we get our signal, let's say around here. The stochastic is telling us to get in. Our Z-score is telling us to move on down. So do we take that trade? Well, the secret is we go over to those higher block size charts. So if you can see the line there that we've got through that trade, quite clearly down through there. Let's go over to the next higher time frame in block size, which is roughly about, do we scroll that out, about there, as you can see. And the signal at that time, let's just zoom in on that, was down. So all looking good for this trade so far, but that's not it yet. So at that time, what was our higher trend telling us? That was actually a green block, and the stochastic fast indicator there also pointing up. So actually, although that trade looked nice, we're not going to take it because the higher time frames, although that was a yes, that was a no, they didn't all line up. So we need the next two time block size frames. As you can see here, I've got a 5 cents and a 20 cents block size as my filters. Then we need them lining up to be able to take the trade, and it'll take you out of a lot of noise. As we can see, that we got another Z score moving down, we've got a stochastic crossing down. Do we want to take that trade? Let's have a look. Well, we've got a down, let's draw the line on there. So it's roughly about in that block there. We have actually got a downturn in there, so it's almost a tick there. But up there, we're still in that green block, so it's a no, and it saved us through. And as you can see, we're probably, you know, because until it all lines up, let's actually find a proper example. So actually, we got one here, one down there. The Z score's crossing back up, the stochastic's crossing back up. It's down in the Bollinger Band, lower ranges. It's moving on up. Let's have a look. We've actually got a turn up there of the block to green, and the stochastic's turning positive. And we're still in that green block, which is good. Although, as you can see, shortly after it does turn, but at that time it was green and the stochastic was positive. We're in that trade, and then we use the rules of that trade to get out of it. So in this instance, I get out there and I've won that trade. So hope you're getting the idea there that, you know, this is clearing out a lot of that sideways noise. It's giving you the best opportunity to get with the current trend, and because a lot of you put moving averages, say, on the chart like that, often they can give you bad signals as well. And I found the best way to filter out the trend is to use this multiple Renko chart look on your charts. And I said you want at least 2 filters, but as you could see here with the filter, we would get into a lot of noisy trades. And as I said, I've tested this and it works best on 3. And as you can see, we've got this longer term one which overrides and gives us the main bulk of that trend in oil. And it was mostly down, but these blocks can stay around for a long time, and they are telling us, you know, the feel, the trend of the market. And like in ordinary candlestick charts where they say trends are friend, and the higher time frames are where all the money flow is, and you should really be following them. It's the same in Renko charts, but slightly different. It's just we're using bigger block sizes. So you're now going to ask me, how do I get those block sizes for the 3 filters? I'm going to show you that right now. So I use my block calculator for getting the block sizes, available to you from my store if you want this, or there's plenty of videos on my channel showing you how to also do it, but this makes it really systematic. Try to make it as objective as possible rather than, you know, subjective, you know, discretionary overlay. So we're sticking with our oil idea here. Just plugged in the historical volatility, 31%, current price 57.60, picked the volatility range bucket just between 20 and 35, and that's going to give me these 5 buckets of different block sizes. Now I've rounded that one up, and remember I was using 0.2 0.025, so that's 2.5 cents. So that's my very fast starting point. And I also had a fast filter, 0.05, rounded that up there. And I also had a slow one in there, 0.2, rounded that up as well. I always like to round it up, just keeps it simple. It doesn't really affect the results. You don't really want to be using block sizes with all those decimal places. But that's the three I used: very fast, fast, and slow. Now, you got the choice when you do this. It's about the only subjective part of the whole process. You know, you might be in the fast window. You might not want to trade oil so quickly. 0.05 might be your block size. You could take the slow and very slow, or you might take the medium and the very slow. It's when you look at the charts, you'll get to see that there's, you know, by doing the different block sizes, you'll see how it filters out noise and gives you the trends in those higher block size windows to help you with, say, the fast and the very fast setup. So that's really all I do. And you know, if I was trading something completely else, whether it's FX, indices, futures, options, whatever, you know, stocks, I can just plug these numbers in, gives me my block size. Depending on the strategy, you know, I might be, like I say, very fast, might even be medium, and then I might take slow as my next filter. Use a simple setup like this, and like I said, you can really simplify your trading, get those, you know, false annoying signals out the way and improve your results. So let's summarize things then. And as you've seen, it really is simple. It's just add a multi-block size, higher block size window setup against your trading chart window. It's going to filter out a lot of the bad noise. It's as simple as that. Like I said, I've used it very effectively across a lot of my strategies, and it's, you know, come up with some really good results in the longer term. And that's what we're looking for: consistency. It allows us to you know, apply discipline, and also massively help our trading psychology. So I hope you found that interesting, and if you have found that hack, you know, really useful, please give us the thumbs up in the video, and don't forget to hit the subscribe and bell notification buttons. Plenty more content coming your way into 2026. Don't worry about that. We've got you covered in all sorts of bases. But if you really did like the hack, you know, that's nothing compared to what you see in the book, you know, sort of sitting over my shoulder there, Renko Chart Trading Revolution. And for that matter, even better, we've got the Renko Masterclass 2026 coming up in January. There's a great early bird bonus on the ticket price, plus you get one of those books as well. So I'll put all the links to that in this in the description below this. But that really is an opportunity to get into Renko chart trading, the strategies, and turn it into a trading business in 2026. So explore that if you're interested. So like I said, I hope you've enjoyed the video. Hope you found it useful, and I'll see you in the next one.